All right, let's go through the answers of what hopefully you got by filling in these given numbers with your payroll template. This one is kind of an easier one than most of them will be from here on out, in that we don't have any withholdings for things like 401k or medical insurance, flexible spending, other charity items. So those are all zeros. So in a sense, what that means is whatever our gross wage is going to be the same for our federal, Social Security, and Medicare for this problem. So that makes this one a little bit unrealistic, but it's a good starting point to get us to make sure we have everything going that we need to. The one thing that this problem is going to do that we didn't do in the template is go ahead and make that make that payment a couple weeks later when it's time to pay our bill to the IRS. We're going to actually go ahead and do that using our T account balances that we have accumulated from our current payroll. Okay, so I tell us what the that we're in the March 15th because we are paid twice a month. That's what semi-monthly means. Semi means cut it in half. So in a month, we're going to cut it in half and do 2 equal the 15th, usually in the 30th or the 31st. When it says bi-weekly, that means you're paid every other week. I think bi is 2, so every 2 weeks. Semi means cut it in half. So basically you wouldn't hear semi-weekly. People usually aren't paid semi-weekly because that would be cut the week in half. So no, you're paid semi-monthly. You cut the month in half. I give us the rates that we need because these are the amounts that are going to change per employer or per employee. So these two things we have to fill into our register. Also, I had to give us this for now. This, we will calculate the federal withholdings later on in the semester. But for right now, I give us the amounts. And then for this problem, the prior and current wages, basically what I'm saying is nothing has changed throughout the year. What they're making now is what they've made before. And then I give us the federal withholdings. Okay, let's go ahead into our payroll register. All of this should have been calculated for you with your payroll, with your formula. What you should have put in is simply what's in the yellow box, in your yellow box too. The employee wages, 2,000. And then the 1,600 and the 1,350. If you put these in, this should have been auto-calculated. This would have said 2,000. And then the only thing I don't have in this example is I don't have a box like you do, but I'm going to put one in right now. Prior pays, and put this into orange. Prior pays, if we are at March 15th, that means we've been paid in January 1, we've been paid January 15th, February 1, February 15th. Actually, not January 1, we've been paid, sorry. You get paid January 1 through the January 14th, so you're paid on the 15th, you're paid on the 31st, you're paid in February 15th and February 28th, and now we're on the 5th pay, March 15th. So we've had 4 prior pays. So what we wanted to do is simply take this number, 2,000 times 4, the 4 prior pays. And then that's how much we've made so far. All of that calculated based on this number. Now, note we don't have anything over here in our 401k other areas, medical insurance. So I could have removed these. I went ahead and just left in a few of them, just so you know that there's 0 and that I just didn't forget them or something. So yeah, they're here, they're just zeros. Now if we can continue to go over, so these are going to be the same as well since there was just zeros here. That's why this one's a little bit unrealistic in that our gross is the same as our Fed, our Social Security, and our Medicare taxable wages. So as we continue to go over now, let's check to see if you have the amount of taxes taken out correct. This cell, column J times, and you should have this in your template, is 0.062 for a total of 306.90. All of this should have been calculated just like this. You didn't have to do hardly any more work once your template is made proper. So check to see if your Medicare tax is correct at $71.78. These I gave us, the 200, the 150, and the 110 right here in the Word document. The state rate should have been calculated for you through your template. I tell us that the county rate, one of the items that you will fill in your little box down here, is 1.5%. So that would be something like Delaware County, perhaps, that they live. And then this should have calculated it by saying federal wages, column I. Yep, column I times 1.5% is $74.25. And finally, we get to our net pay because we don't have anything else taken out of our check. And check these to see if you got these correct. Now, I went ahead, and since this was early in March, that this pay is the 15th, our employees haven't made a whole lot of money yet. So therefore, they are actually under, in some cases, the cap. Remember, just briefly, we've talked about the cap in our journal entry part lecture, where the cap for the FUTA is 7,000, and the cap in Indiana for the SUTA is 9,500. So what I've done is we can go ahead and figure up our prior FUTA taxable wages. And you don't notice how I have this at 7,000. You might think, hey, wait a minute, that should be 8,000. Well, we don't want to go over 7. I want this number to be 7 and then no more. So for the rest of the entire year, this number isn't going to change because I don't have anything over here to add to it. We're going to stop at 7,000. And this number won't go any higher than 9,500 because that's the cap. We can't go over the cap. So we always want to check our prior wages. What you'd probably want to do here, this is how I would do it, is I would get a baseline to see what it is. So taking your, it's basically just taking and copying your prior Fed wages, 8,000. Knowing that this is over the cap, we're going to override and put in 7. And then this one, I said copy C3, prior gross wages of 6,400, okay? And then 5,400 for the other guy. That is not over the cap, so we're fine with those amounts. Now let's skip over this for a second. Let's go over here to the FUTA. We're going to do step 1 and step 2, just like how we did with Social Security. We're going to come to each person. So we're going to do, and you probably want to do this, you're going to do employee number 1, step 1 and step 2. And we don't really even need to do it for employee number 1 because they're already at and over the cap. Or not over, but at it. Okay, so we'll start it with employee number 2. That's how I'll show the work, how I got these amounts. Okay, so employee number 1, we're already at the cap. So the amount here of how much more do I need to tax for FUTA? Nothing. I'm at 7,000. Now this is going to be either our current federal wages or the amount that we have to calculate through steps 1 or 2. So really what this number is to start with is I come over here to our current federal wages, 1,600. And I don't want it to stay 1,600. That's what we're doing step 1 and step 2. Step 1, it's either yes or no. And so I need to take, remember, we'll just go back to your previous, the two, what the steps mean. I'll go ahead and type it out here. Step 1, does do prior wages plus current wages exceed cap? And the answer is yes. So I'm going to answer yes, thus go to step 2. Step 2, because our cap is 7,000, and so if I wanted to show the work, we could. Let's go ahead and just show the work, I guess. We had 6,400 in prior wages. We'll go up here. Plus 1,600 in what I'm using as my federal wages. If I add those two together, we go over the cap. So what I want to do is go to step 2, and I want to take the cap and subtract out my prior due wages. So we do that. We take 7,000 as our cap, minus 6,400 as our prior wages, and that equals $600. So my 600, I calculated that here. And I'm going to want to do this now for employee number 3. You won't have to type this out all the time, but you're going to want to at least show me what you've done. So I'm going to go ahead and type it out for number 3 because the answer is going to be different. If I take my prior wages plus my current, so this is what it is by default, $1,350. That's what my gross wages were, $1,350. So I come down here, do my prior wages of $5,400. Plus $1,350. Does that go over the cap? And the answer is no. So what I do then is just leave amount as is, no change. And I can get rid of step 2. I'm going to want to do the same thing now for the SUTA part. Well, let's go ahead and finish out, I guess, and look at our FUTA tax. So we've done these two. Might as well go ahead and do our FUTA tax. It takes our FUTA wages for this pay times the 0.006, and then do that for each cells below. Just bring it down, a little square, and bring it down. So we have a 7,000 cap here, just as a reminder. We have a $9,500 cap here. When I'm not gonna do the work that I did for the FUTA piece, but what I'm gonna show you what I've done. So for this one, our typical answer would have just been 2,000. But if I would have taken 8,000 plus the 2, that's 10. That's over my cap. I have to go to step 2. Step 2 says take 9,500, the cap, and subtract out your prior wages. When I come to employee number 2, I take their prior wages plus the federal, where it was 1,600. I add those together, and if I add these together, that's 8,000. That is not over the cap, so I don't do anything. I just leave it at 1,600. This guy is way below the cap still, so I don't do anything with him either. Now for the SUTA, I tell us in the problem that the rate was 2.5%. So I put in that 2.5, and then all these cells reference that, as you should have in your template. Now we've got the entire register done. We're ready to go ahead and move over to the journal entries. These journal entries should have been self-populated by the program through your formulas. So this is what mine looks like. Got the $49.50 of our wages. And let's go ahead and put this as a freeze pane. So I got the $49.50, that matches. Social Security of $306.90, yep, that's there. Medicare, all of these match up. Pay of $38.77, let's make sure that matches up. Yep, $38.77. We can do our check at this point. Take our debit and then subtract out the total of all of the credits before the last one. And it does check. So my debits equal my credits. I can come down now and do journal entry number 2. Remember, this one is going to be calculated based on whatever these guys are. So the Social Security, that's just just another $306.90, another $71.78 for the Medicare. The FUTA and the SUTA, the $11.70, we just calculated that over here. And the SUTA, the $111.25. Our payroll tax expense is simply just adding these up. The final thing I tell us is, okay, on March 30th, it's time to pay our taxes. To make this one so I didn't have to go back and forth between another sheet, I went ahead and just put a sample of the T accounts off here to the side for this problem. Usually you're just going to do these off maybe in another sheet, pull up another tab and have that Excel payroll T account sheet just in a separate tab, copy and paste it over here. You're going to really need to do this when we get to the payroll project. You're going to find that that's going to be essential to do the trial balance. But for now, the Social Security, if I had $306.90 for the employees that was taken out of their check, so I put $306.90 here for part of my pay. So you could put a little X here if you wanted to, that we recorded it. I have the employer's portion, the same number, $306.90. When I added those up, I get $613.80 is what's due. So this would be, I don't really like exactly what I have here. I want to put one more. If I was doing this, I would have a little balance here that says $613.80 over here. And then this is the payment. So this would have said payment here. And this would have been journal entry number 1, journal entry number 2. And then I probably would have had a balance here. I don't think I'm going to do that in this video. I don't want to take up more time. My balance would have said $613.80. And then I make a payment of $613.80 when the March 30th comes around. And then I'm left with nothing that I owe once I make that payment. So let's look at that payment. I said I needed to make a debit of $613.80 because that's what my credits amounted to. My credits over here, when I added those up, was $613.80. So I needed to offset that to pay it off as a debit. So that's where that came from. Medicare, I put in the 2 amounts. I've got Medicare for journal entry number 2, $71.78. Journal entry number 1, $71.78. Remember, the employee and the employer both pay. If I would have totaled this up, it would have been $143.55. Now I'm ready to make a payment at the end of March for $143.55. So I have a debit there of $143.55. I have a debit here of $143.55. Now, I didn't ask us to make a payment for these guys, so that's why I don't have a T account set up, but we would have put these into their own T accounts. We would have put all of these in. The only one left that I said we had to make a payment on was our federal withholding payable. Remember, that's only the employee that pays that. So that's why I only have it in here once. There's no other credit to that account. The employer doesn't pay into that. So it's $460. So that means when it's time to pay the bill, the employer needs to pay that $460 that they took out of the employee's check. So I come over here and do a debit for $460. And then finally, I write a check to the IRS for these three amounts and send it in with my Form 941 that we'll talk about in a couple weeks. I send in a check for $1,217.35. All right, that concludes our final required lecture. I hope this was a whole lot to throw at. We're gonna keep working on these throughout the rest of the semester, but it's vital that you have this template ready to go as we move throughout the course. Okay, I will stop it here and I will see you next week.